All right. Hey, good morning on a Thursday, the 15th of August. We're right in the middle of the week. Pretty interesting thing to remember. Options, I should say monthly. August, monthly options expire tomorrow. Excuse me as I sneeze at y'all. How is that possible? Well, it's kind of the way the month worked out. Friday the 2nd, the 9th, our options expiration is the 16th, which means we have like a 5-week options expiration through September. A little bit harder to place credit trades, a little bit harder to sit and be patient for things to expire. But just remember, September is a 5-week option expiration, which makes it harder to wait. What I'm talking about there is patience for credit spreads. Can't type. For credit spreads to expire. Which really comes down to what I want to talk about today. I mean, it would be foolish for me to say, well, actually, you tell me. What would it be foolish for me to tell you today? Here I am placing trades, doing a trading class. What would it be foolish for me to tell you guys? Anyone have an idea? What would it be foolish for me to say or do? Having a market direction, any market direction, bingo. So it would be foolish for me to assume that I have a market trend, if I can go ahead and say that. That's what you're telling me, Abraham. A good directional trade, and that I have some special knowledge that will guarantee you a profit. With all due respect, and I love a lot of the education people that are out there, boy, if you hear someone that's got this great trade and we're doing this, we're doing that, you need to stop a second and question what the hell you're hearing. What you need to be hearing right now, non-directional, which are going to be long condors, not iron condors, because you want a bull call and a bear put. So just long condors, protective puts, collar trades. That could be a poor man's collar. That could be a poor man's collar, a full collar trade. You could even probably be doing somewhat well in strangle straddles. So non-directional would be a good way to go. But I'll be honest with you, today I'm not going to talk about trades. I will not be giving you a trade. I am going to be talking about patience and managing trades. So starting off, I found this rather interesting, but I got a call Wednesday, and the call was, did you place any of your Tuesday night trades? And what do you think I told them when they called and said, hey, did you place any of your Tuesday night trades? Rich, nice to see you. And by the way, I still owe Rich a conversation. We're kind of in the car, but appreciate your call to me the other day, Rich. And I feel like I didn't do you justice, so more than willing to talk with you and get a call in today again. What do you think I said for my Tuesday night trades? Did I place any of them? The short answer was hell no. And she politely said, but they were so much cheaper. And my comment to her was, well, yeah, when the market's down, opening up, 168 to 200 points down, of course they're cheaper. And with all due respect, Mary, they were a hell of a lot cheaper when the market was down 800. So, taking a quick peek again, and I tried to be as polite as possible. A call, a directional long call, could have been had yesterday at around $2.83. I did not place this trade in the morning because our market sucked. You've got to use common sense. Well, Kevin, instead of getting in at $3.60, I got in at like $3.55. Wow, you saved a nickel. Futures were all over the place. A lot of people ask me, well, when do you place your trades? So you have to use common sense and don't put bullish trades on in the morning on a bearish moving market. Use common sense, and saving a nickel, dime, or quarter doesn't matter when you could have saved dollars. Common sense, people. You kind of want to say use your brain. And when you say use your brain, you've got to go and use your brain. Hold on 1 second, please. Sorry about that. My beautiful secretary, i.e. my wife, just came in, said we need to pay our garage door guy. Love the lady. All right, so you got to use common sense. Who cares if you save a nickel, dime, or quarter when you can save dollars? I really would look to some people and say, why on God's green earth would you go be putting a bullish trade on a bearish market? Well, Kevin, last night you said, oh my God, a lot happens overnight. Futures, China opens, China closes, Europe opens, Europe closes. Oh my gosh. This is an ever-changing market. Because someone said something yesterday might not have any bearing on the market today. Common sense, people. Limit orders. Well, I put a limit order, I saved a nickel. Mary, I love you when you hear this, because you're not here with us right now. But just because you saved a nickel and put a limit order in, you could have got in at 283. You could have saved 77 cents. And it's even cheaper today. So, common sense, saving a line doesn't matter when you can save dollars. Don't put bullish trades in the stock on a bearish market. Limit orders if the trend changes, doesn't protect you. Doesn't necessarily help and might not be important the next day. Kevin. What about if you did the spread? Oh. I kind of chuckled. And again, Mary, I love you. And thank you for letting me use you as an example today. Will someone please tell me, is our spread bullish or bearish? It's a long-term bull call, right? So, was this a good trade to put on yesterday when Baidu was trading at $97 at the open? Or was it a better trade to put on towards the end of the day when it was trading at 93, 92 and change? It's still a bullish trade in a bearish moving market. Simple word of advice. You probably shouldn't enter a bullish trade in a bearish market that most definitely, Ida, turns on a dime. It's unpredictable, which means you need to have some serious cojones to be trading in this market. You've got to be okay with some wild swings or your spread trades will lose half the value instantly. Just on paper, doesn't mean you're going to lose everything. Takes a while for things to catch up. And hope for things to come back today. But again, longer term bullish trade. I'm still waiting on this one to enter it possibly today. Texas Instruments. Is it a bullish trade? Yes or no? Is this trade a bullish trade? A September 120, 125 bull call. Of course it's a bullish trade, right? It is a short-term trade. It's much cheaper to get in right now than it was yesterday. No, it's even worse. Kevin, I can get in cheaper. Who cares? But yesterday you said, yesterday it was up $3 more than it is today. Forget what I said yesterday. A lot changed overnight. Trump bashing Xi for Hong Kong. China coming out saying, screw Trump, his tariff thing doesn't really help us. Who cares what I said or what anyone said the other night? Common sense says, hey, it opens up down, our markets are down. Here's a cliche. Low tides sink all ships. Well, would you put it on now? No, I'd wait another day. I'd wait to see if we get a bounce. Ah, but you might miss the bounce. I don't care. Let's play probabilities. Let's not play the gambling. Let's not play the what if. Let's go ahead and give it another day. Let's see if we get a bounce. It's kind of neat because sometimes at options expiration, you get a surge as people short cover. There was a lot of selling. We might get a short covering surge tomorrow. I hope so. I don't think it's going to happen, but I hope so. But if you know you're in a volatile market, if you know it's tweet based, if you know rate hikes, rate cuts, did not work, China trade deal, Hong Kong, Brexit coming up, I'll be honest with you, we're in a pretty wild September, October. And can I go ahead and make one more comment to you? If I was to give you a trade, even non-directional on a day like today, even if it was non-directional, and I'm going to give Jeffrey some credit, kudos to him on these long condors, we're getting a drop from 24 down to 21. 3 divided by 24, we're getting a 12.5% drop today. We're getting a double debit trade on the condors that's getting a 12, or probably translated across about a 25% drop in volatility, which means even on the double or the long condor trade, you're going to get a volatility crush hit on a non-directional trade. I would be doing you a disservice to suggest a trade for you today. And my expectation is that I would expect you guys to be able to tell me and call me out. Hardest part of trading, 100%. Patience. Kenny Rogers gave you that song, The Gambler, right? You got to know when to hold them. You got to know when to fold them. You gotta know when to stay around, you gotta know when to run, right? Know when to walk away, you gotta know when to run. That's the way it is. Patience. It would not be a good idea for me to be giving you a trade today. It would not be fair. It would not be right. It would, for me to act, you know, and again, Jeffrey's knocking it out of the park. For those that follow safe option strategies, plug out to him. Even a trade that was put on yesterday could have lost anywhere between 20 to 25% of its value and volatility crush. Would anyone like to make any comments? I feel like I've been reprimanding a group of people, and that's not you, but I do think this will be helpful for some people that are not my everyday people. So how many, for the 14 of you that are here, under no uncertain terms am I reprimanding you at all. I am doing this for the common sense and to help those that are trading or trying to trade on their own, that may be following, I don't know, Chuck Hughes or Options Pirate, you know, all these kind of weird people that are out there thinking they've got some edge. They're just people just like us. I hope I've come across obnoxious enough to strike a chord with some people to make them think about it. But are there any comments? Thank you. David, makes sense. I appreciate you being so candid and giving us no BS, but I shorten that to BS. I'm not a BSer. I'll call it straightforward. And Lance, refreshing to see someone tell it how it is, share real portfolios, and be willing to protect our money. Lance, I appreciate that comment as well. Mary, I'm sorry for picking on you when you're not here. You're always welcome to call me as well. But, and again, I love you, Mary. I'm just using you as an example because I think using you as an example can save other people tens, if not hundreds of thousands of dollars through their trading or investing career. Guys, I'm just trying to make a point today. I hope this comes across as helpful. I hope this comes across as, for some of you, as common sense, because it should. I hope I'm not alienating or making too many of you frustrated, but I'm giving you an honest answer, and I hope that it is received in the same light or with that understanding. Guys, have a wonderful weekend. Yesterday, 50-50. We could see a continued drop down. We could see some short covering. Market action suggests short covering, but I would not pass it by the market that it would follow through with what it's supposed to do. Really unusual market right now, so just know that and expect that. Guys, have a wonderful weekend. Enjoy your options expiration tomorrow. I appreciate you with my ranting and raving today, and I do hope this is extremely helpful for all of you that are looking to do or want to do some of your own trading. Have a wonderful weekend, guys. Talk to you next week. Bye-bye.